Hi guys, welcome to my YouTube channel. Thank you so much for all the subscriptions thus far. I really appreciate everyone's support and for supporting me in what I want to do. Please remember to subscribe to the subscribe button if you already haven't. So today I want to talk about financial freedom and why financial freedom. What are the steps that you need to take to try and get onto this journey if you already haven't started the journey? Today's YouTube will be more of a presentation format, as there's a lot of information and visuals that I need to share. So let's get into it. Let me just share the screen. So today I just want to share about the basics to financial freedom. What is financial freedom? What is it about? And things like that. So just a disclaimer again, I'm not a financial advisor. What I'll be sharing is what I've learned, and nothing in this document constitutes as financial advice. The information is therefore not governed by the Financial Advisor and Intermediary Services Act. So a road to financial freedom is like a journey or a marathon that you train for, and you gain strength as you're going on the journey. Now, there's various stages of journeys that you see on your screen, starting from the left, step one, which is financial dependency. Now, in this particular stage of the journey, you're fully dependent on credit or parents. So usually when you start working, you're starting out your life, maybe your job requires you to have a car, you buy a car on credit, you may be looking to advance, so therefore you get a credit card to just furnish your apartment. So you sort of get into the journey having already started getting into credit, or if you have student debt, you're starting off the journey sort of financial dependent on credit. Moving on to stage two, where there's financial solvency. This stage actually means that you have enough to pay your bills on time. So you've built up a credit record, you've gotten into debt, now you're building a profile where you're able to meet your obligations, your credit obligation on a monthly basis as they become due and payable. Now this stage, you're comfortable, you're able to meet everything, and you're cruising along. In terms of stage three, which is financial stability, it's a stage where you're able to pay debt and have a bit of disposable income to start saving. Now, this stage is very important because ultimately you would have paid off some of the unsecured credit, which is usually more expensive form of debt. So you'd have settled maybe an overdraft, a credit card, and now you found yourself some disposable income to be able to invest some of the money. In stage four is debt freedom. In this stage, you've lowered your debt, so you've maybe paid off your car, for example. You now have a bit more disposable income to be able to increase your savings and now become able to invest. Now, the difference between saving and investing is saving is more short-term focused. So anything below a year or 2 years is short-term. So below, let's just say below 5 years. And investing is more long-term. So anything longer than 5 years, where you know you're investing for maybe your child's education, or you're investing for your long-term wealth. So at this stage, you've paid a bit of your debt off, and you now have a bit more disposable income to save and invest. Stage five is financial security. With financial security is that you're able to increase your investments and earnings from your income to be able to cover some of your expenses. So you've reached a stage where your investments are now maybe paying you dividend income or rental income, and you're able to survive beyond just your normal salary if you're a salaried employee, or from your business. Your investments are now yielding you a bit of return to allow you to cover some of your expenses. Now, financial independence is stage six. At this stage, you're basically getting cash flows from your investments, which are able to cover your expenses. So it's that point where your expenses and your income from your investments meet. There's what we call a meeting point, and at that point, your investment income is now able to cover your costs. And this is a great place to be, and ultimately that's where we are all working towards. Stage 7 is financial freedom, where your cash flow now is greater than your living expense. Now, this is the next stage where your cash flow is greater than your living expenses. You are able to cover almost everything, and you have a bit more flexibility in terms of your choices. Now, financial abundance is the final stage, which is where we all want to be, where we've got more than enough to just survive and more than enough to do a lot of the things we want. And it's basically the ability to have options. So why financial freedom? I think as we move towards financial freedom, there's various questions that you want to ask if you're wanting to embark on this journey. So financial freedom is about making your dreams a priority. There's always this question: is what price are you willing to pay for your financial freedom? Is that is spending recklessly worth that dream of having financial freedom? So it's about making your dreams a priority. It's about having choices. You pay to trade your time for money. In our careers, our employers pay us for our time, depending on our qualifications, skills, and industry experience. Financial freedom gives you the options to choose how you spend your time. It's about having choices, mitigating financial risks. The future is uncertain, but finances should not be one of them. I think COVID has shown us that things can change in an instant. People have lost their jobs, salaries have been cut. Being able to mitigate financial risks is essentially just taking steps currently to ensure that you have got an emergency fund. So should anything uncertain happen financially, you're better in a place, better able to take care of that uncertainty. Keith Lanson once said something very important. He said, being uncovered in bed can be fun, but try being uncovered in an accident. That will not be fun. So financial freedom is about being proactive. Do what you can today, because tomorrow is not promised. If you have a good job or a business that is giving you great income, pay your debt off earlier when you can, save for an emergency, and invest. So it's about paying your future self first. It's about being a bit selfish and putting your future self first in terms of trying to invest. It's about leveling the playing field. A lot of us, when we start our business or our first job, we're trying to level the playing field of financial lack. I know some of us are first in the family. We're literally the first to get a good job. So therefore, we're trying to make up for the past, or maybe of our parents or grandparents who didn't have much. We're trying to level the playing field for ourselves and for the next generation. So investment has a sort of a life cycle, so to speak. There's this stage where you earn, starting off where you're earning. You invest a lot of efforts into increasing your earning potential. You maybe do a short course that will help you at work to be better placed to do something more than what you're currently doing, and therefore increasing your earning potential. It's about saving. The first habit before you start investing is to learn how to earn interest by saving. It's about putting a small portion of your income away so that you're better, you can then earn an interest on it. At this stage, you're trying to just put something away, what you're comfortable with, so that over time you practice this principle of being able to put something away. Now, don't start off with a big amount that will make you in the middle of the month go and take out of your savings account. Start with something small. If it's 100 Rand or 250 Rand, something that you're comfortable with, that will motivate you to keep going on a monthly basis. And then once you've mastered the savings aspect and leaving your money for the whole month and allowing it to earn a little bit of interest, you then move off to investing. Now, in this stage of the investment life cycle, you invest in income generating assets, whatever that is for you or whatever that you've defined that to be it a rental property, be it investment income from investments in stocks, shares, or bonds, or whatever it is that you've invested. That investment over time will be able to give you an income. And that income will increase depending on the size of your portfolio. I know, for example, on my portfolio, I get a dividend. I usually calculate a quarterly dividend on what I get on my investments, and I'm able then to reinvest some of that dividends. Now, the whole point of investing and saving is to be able to leave a legacy. you're not only building the financial legacy for yourself, but you're building a financial legacy for future generations. I have 2 kids, so I know I'm not only building for myself, but I'm also building for my kids. Now, you want to start this journey of financial freedom, but you don't know where to start. Start off by resetting. Reset basically means begin with the end in mind. Look at your current situation, financial situation, and ask yourself, are my financial habits aligned to my long-term financial freedom goals? Is what you're doing on a monthly basis aligned to your long-term financial goals that you have for yourself? And if there's a disparity between where you are and where you want to be, what are the steps you need to take now to correct that so you can get to that point where you're investing and saving on a monthly basis to get you to where you want to be financially? Do you have a financial plan in place? Or are you just going with the flow in terms of your finances? The next stage is to review. What do I have currently in terms of my investments? Some of us have pensions, retirement annuity, and other products that you have, education policies for your kids, and other investment products that you might have. What do you have currently, and what is missing from that basket of investments that you have that will get you to your financial goals? So what do I need to add more of? What do I need to take away more of? Are my current investment products aligned with my financial habits and my financial goals that I have? What can I add more of? What can I take away? Do you have a South African bias? I know if you live in a certain country like I do, South Africa, you sort of have a South African bias. So your property is in South Africa, your pension is in South Africa. Is there an opportunity for you to diversify outside the country, maybe the US or maybe Europe or Asia? What does your current portfolio have, and how can you diversify that so it's diversified in terms of geographical location? And the next step after you've reset, you've reviewed, is implement. Formulate an investment strategy based on your goals. Are you in the accumulation phase? So if you're in the accumulation phase, for example, you're looking for dividend income. Are you investing in growth stocks so that they don't necessarily pay dividends, but over time the share price grows, and maybe you can sell it at a later stage and therefore get your possible income. After you've done all of this, and you need to action. So there's no point in resetting, reviewing, implementing. You need to action. You need to take action. It's a call to action. What do you need to start doing on a monthly basis so that you start moving towards the stage of implementing your financial goals or your investment strategy that you've put in place? Do you need to start to put a debit order on your saving and investing to force you to be doing it on a monthly basis? Do you need to pay extra into debt so that you can start getting yourself out of debt, so you can then end up having a little bit of disposable income and therefore be able to start saving and investing? Reset. It's start. Where do you need to start? You basically need to ask yourself, what is my financial independence number? And your financial independence number is basically 300 times your annual expenses. This gives you what they call a financial independence number. Essentially, the financial independence is the number, is the amount you need to have invested in order to allow you to generate an income that will cover your monthly expenses. Now, this research has been done quite a bit. It basically says if you have this amount and over time you draw 4% of it, you'll be able to draw an income 4% from that number over time, and it will be enough to sustain you for a long period of time. What is your investment strategy? What do you want your investment to accomplish for you? Is it returns? Is it income? Those are the things you need to look for. This is also linked to asset allocation. I know this first video is very generic, but some of these topics I will cover in other videos that I'm going to make in the near future. Are you invested in dividend stocks or growth stocks? Are you investing for dividend income? Are you investing to see company growth, and that's how you then make your money? Review. What is your risk profile? I know I'm a moderate risk profile, moderate to aggressive investor. So therefore, I will tolerate a little bit more risk than the average person. So I'm willing to put a huge portion of my funds into equity, as an example, which is considered more risk than cash, for example, which is considered a little bit safe. So I'll most likely have a little bit more of my portfolio in equity and less more cash, bonds, and other asset classes. What type of investor are you? What is your risk profile? Do you have an emergency saved up? I know literature says we need at least 3 to 6 months of your monthly expenses saved up, so that should any emergency happen, financial emergency happen, you're in a better place to mitigate that risk. Which investment vehicle do you want to use, and what is the tax implication? What are the fees of whatever investment you're going to make? These are the things that you need to consider. Implement. Once you've determined where you want to be and where you want to go in terms of your investment goals and your investments, you need to decide which asset classes do you want to invest in. Do you want to invest in shares? Do you want to invest in exchange traded funds, property, alternative assets? Like, I know there's angel investors or private equity firms that raise funds that you can invest in to invest in the long term. What are sort of the things that you need to do to invest in yourself? Is there networking opportunities? This is basically has to do with your earning potential. What can you be doing now so that in the next 2 to 3 years you increase that earning potential? Is it taking a course? Is it studying further? Is it becoming more a specialist in your field? What are some of the things, or do you need to come up with a side hustle that will allow you to earn extra income? It's about knowledge. How can you acquire more knowledge in terms of the books, the courses that you can do to better understand some of the principles that we'll be covering and talking about? And who is the one person that will hold you accountable in terms of your financial goals? I think it becomes very important for you to decide who you trust, who you feel is a safe place for you to have those discussions and monthly check-in. Who holds you accountable in terms of keeping you in line in terms of your financial goals. Find that person. Is it a financial planner? Is it an advisor? Is it a friend? Is it your co-worker? Is it your husband? Find that person who will hold you accountable in terms of your goals. If you need to do a quarterly check-in, maybe that's something that you need to consider. But the most important thing is, what behavior can you change now to start making sure your financial goals and financial habits are aligned? What are the small things that you need to change for you to get to that place where you're able to invest more, you're able to save more, and ultimately sort of get yourself on this journey towards financial freedom? Now, I've just highlighted some of the steps that I've taken personally. I know for me, it was about paying my debts off faster using the snowball method. So for example, I started off with my credit card, because my credit card interest that I was being charged on my credit card was very high. I think at the time it was around 18%. So for me, I chose the credit card because it was one of those high interest debts that I had. I cut up the credit card, and over a few months, I started paying down the credit card limit and reducing the credit card limit as I went. Once I had fully paid that off, I then moved on to the car. And slowly I took the money that I was paying for the credit card, transferred it to the loan. So therefore I was able to pay double what I was paying on my car. And therefore in the end of 2019, we fully settled and paid off our car. That enabled us to have a little bit more disposable income, and we're therefore able to shift that money to invest a little bit more in the tax-free accounts. And it was also about simultaneously building an emergency fund. For me, I was able to pay my debt faster and also start with a small amount to build up my emergency fund, because I know that if I didn't have an emergency fund, I was going to run back to debt in order to deal with any emergency that might have happened. And then I also started my investment portfolio. I started with a small amount. At first, I started with 500 Rand. I literally cut out doing my hair and my nails, and I started putting away 500. I found something within my budget that I could cut, that I could start off with 500 Rands on a monthly basis. And we made sure as a family that when our income increased over the years, we kept our lifestyles the same. So therefore, we're able to have a little bit more disposable income because we paid down debt, and we also, at the same time, we're getting salary increases, which really helped. How did we practically implement this for us. I think for us, we started saying we had a rule that 10 to 20% of our income was reserved for saving and investing. That was non-negotiable on a monthly basis through a debit order. This debit order goes through and we make sure we invest this income. And then extra funds that we got through bonuses or increase, we put towards settling our debts. And anything we got from like our family stokvel, we put to debt and investing. And one of the things that we've done, like I've mentioned, is that we share one kind of household, and whatever income money we would have used towards paying for an installment, insurance on a second car, we make sure that we put towards our investing and saving journey. So that's it for today's YouTube session. I'm looking forward to next week to sharing more on my financial freedom and some of the lessons that I've learned. I'm also inviting a couple of people that I think will be helpful in terms of explaining some of the financial terms that would really be helpful for my viewers. Remember, send me comments, like this video, subscribe, give me feedback in terms of the channel and what you would like to hear. I've already got a few ideas, but I'm always interested to hear what else you guys want to hear about. Thank you so much.